Good afternoon, everybody. We welcome Rob Price today from Sound Money. We've invited him to come speak to you on cryptocurrency. Rob Price is the founder and CIO of Sound Money, a digital asset manager for high net worth clients based in Los Angeles, so it is early morning for him. Prior to Sound Money, Rob was the head of asset allocation for South Africa's largest pension fund between 2016 and 2021, an institution with $25 billion assets under management. Bragging rights for those that know which pension fund this is. Rob is a trained economist and CFA charter holder, and Rob believes that the most important knowledge is not necessarily learned in the classroom. We welcome you, Rob. Thank you so much for joining us so early. And if anybody has, everyone on the call has any questions, please make sure that you type them into the chat and we will go through them after the session. Thanks, Rob. Over to you.
Fantastic. Thanks for having me. Thanks for the introduction, Megan. Thanks for inviting me, Ryan. It's great to be here. Yeah, getting straight into it, you've obviously given me a personal introduction there, so thank you. I mean, I'm sure I know some of the people on the call, but I can't even see. So, for those who don't know me, good to meet you. What we're going to go through in the call today, we have an hour, so I'm going to try and keep the presentation to about 40-45 minutes. Try and keep it reasonably brief. Leave time for questions. Yeah. And the kind of the topics we're going to go through is the three trends that are, to me, make this technology and adoption thereof, not just from a individual perspective, but also from an institution perspective and from a regulatory perspective, why I see it actually as inevitable that the adoption will continue. These three key trends that I'll touch on, and then answering a number of questions that we often do get. Things like who actually uses it? How does one actually think about the volatility? It's such a volatile asset. What is crypto versus Bitcoin? Most of the presentation is focused on Bitcoin itself, but of course, I'll touch on briefly kind of what is crypto. And then, the regulation front is always important. Aren't regulators going to ban it? Answering these type of questions, and then finishing off where kind of practically actually where are we in the cycle? A few comments related to this is the cycle and where we are economically, and what we might expect going forward. So yeah, please do send those questions and write them down below. Looking forward to kind of engaging with you, and yeah, the interaction is great. So as I mentioned, I'd like to do a demonstration. So for anybody who did download the Moon wallet, if you come onto your wallet and you just go receive, so you should have your Moon wallet. It should be pretty simple. There should be a send and receive button. You'll obviously have no capital on your Bitcoin or dollars at this stage unless you already had the wallet beforehand. If you go receive and you turn on your camera, you should be able to show me the receive QR code, and then I should be able to send you a small amount of Bitcoin. So who's the first taker? I see Samantha's got her hand up. Can you show me that QR code? Can you turn on your video and show me the QR code? Samantha had her hand up. Now we've got somebody else having their hand up. We can't turn our cameras on. Are we allowed to change the permission there? Is that something that's going to take a while to do?
No, Samantha, you can. Oh, there's Samantha showing hers. So Hini.
Samantha, where? Okay, I can't see Samantha. We can't turn. How do I find Samantha here? Samantha, is that it? SS?
Samantha, you can allow your mic.
All I can see is Morne, Christine, Megan, and Nhlankla. There we go. I got one. Okay, unfortunately, that's the one I've seen. So I'm going to have to go ahead with the one that I've seen. I mean, I can send more to other people later, but obviously I can't. I can't sit doing this because we'll have run out of time. So I'm going to do it once. I'm sending this to Sahini. He'll be our guinea pig. All right, and Sahini, are you able to turn on your mic? Just because I'd like to chat to you for for a short moment. If you could just tell me how difficult was it to set up the wallet?
It was really easy. Took a couple of seconds.
And have you received any capital yet?
Not yet.
Not yet. Okay, well, let us know when you've
Okay, I
received
have.
capital.
Yes.
You've received your
I have.
capital, so you've received a
Yes.
few dollars there.
Yes.
All right, so you said it was pretty easy, and you received that capital, and well, I meant it took a little bit longer because it took me a while to see your QR code, but once I saw that, it probably took under a minute. So I think this short demonstration hopefully is reasonably powerful to see here. You'd be able to set up a wallet. You basically set up a bank account in under a few minutes. You send. I mean, you now can send yourself, but I mean, you can receive capital in under a minute. I'm obviously on the other side of the world. It could have been anywhere. You could have been in China, could have been in South America. No documentation required. And this is actually impossible to do with a traditional financial system. It's impossible to set up a bank account. It might take months to set up a bank account in some countries. You obviously need a huge amount of documentation. And once you set up that bank account, you won't be able to send money to anybody anywhere in the world. It's a process. It's an onerous process. So this for me hopefully is a demonstration that this is actually quite a profound innovation that has taken place with Bitcoin, and you've been able to do this for quite some time, for quite a number of years. So I said I'm going to get into more kind of theory about touch on once again is getting into these case studies, because the question I get a lot is who actually uses technology? Why would people actually use it? And here's an example, right from our home in South Africa, a place, an institution called Bitcoin Kasi in Mossel Bay. These are a bunch of surfers, Owetu, Sibulele, and Lucky. They work at a school, at a surf school, and they get paid in Bitcoin. And as you guys well know, the South African banking sector is actually pretty good relative to the globe, but it's still not that easy to set up a bank account. Despite the fact that the banking sector is pretty efficient, you require a proof of address, you require, identity documents. Getting hold of these pieces of information are not as easy as you might think. Getting an identity document from Home Affairs is not particularly easy, and getting a proof of address when you live in an informal settlement is probably, an additional, complication. But with Bitcoin, you're able to set up an account and receive money and send money, even in very low amounts. Yes, I mean, the volatility is a challenge, and we will get onto that, but it does allow you to open up that account, to receive capital, and in very low amounts, which is quite powerful. And I'll send through a link, of if you haven't come across Bitcoin Akasi, it's quite an exciting project where not only are they're helping the community by getting people involved in outside activity, but also helping people through teaching, through earning capital, and then learning about this technology, which is really empowering. And then over and above that, getting merchants and retailers in the community in order to receive Bitcoin, so that they can make it more useful, of course, and not just holding it. So once again, it's a really practical example of why this technology can actually be useful for people, right today. All right, so getting onto these three trends that I've spoken about that for me make the adoption of crypto and Bitcoin inevitable. The first is the internet, right? We've had the internet since actually the late 1980s. Mass mass use in the 1990s. It's been incredibly powerful technology that has impacted so many businesses, so many industries. It has, decentralized publishing, retail, entertainment, travel, and changed these industries in ways that we, couldn't have even imagined on day one. I mean, when the internet first came out, people, talked about email. They thought, well, how would people even want to send digital letters? We've got the post office. But now hardly anybody uses the post office and everybody uses email. So, the fact that the internet changed these industries in so many different ways, but it hasn't actually changed money and finance all that much. Yes, we can use banking online, but there's no actual native money of the internet, no way to send money to somebody else on the internet without using a intermediary. Every time you send money over the internet using a bank, you go through an intermediary. You have to ask them for permission to access your capital and send it on to the other user. But as you just seen with our demonstration, you can set up an account and you can send and you can receive capital without anybody's permission with Bitcoin. So this trend has actually been, it's not only a powerful outcome, but it's been a trend that's been intact ever since the advent of the internet. Famous economist Milton Friedman, said in the 1990s that he thought the internet would be this major force, but one thing that was missing that would soon be developed as a reliable e-cash. And Bitcoin just was the first one that worked. People were working on this problem for many years and failed because it's really difficult. It was really difficult to do. But Bitcoin is a profound innovation because it succeeded. It does actually work. It allows you to send, it allows you to receive, and it allows you to store a valuable value because the asset is actually scarce. So this trend, I think, is a strong one. We continue to see increasing digitization of the world, and it's moving now into money and finance in quite disruptive and powerful ways. And once again, touching on the case studies, because often people think that the technology is not useful. This is a lady from Afghanistan, Ferishteh, and in Afghanistan they have restrictions, many restrictions on women just because they're women. It's difficult to open up a bank account. It's difficult to get a job because just you're a woman, which is obviously hugely discriminatory. But not only that, is that there are also restrictions on people outside of Afghanistan interacting with Afghanistan because there's sanctions on Afghanistan by the United States. So this makes it quite difficult for people in Afghanistan, because obviously not all of the people are discriminatory and criminals. That's clearly not the case of all the people who live there. And Bitcoin, once again, is a powerful technology because it allows people to set up an account, receive capital in wages, and also to receive donations from outside. So Code to Inspire is an organization run by this lady, Ferishteh. Not only does she teach ladies in Afghanistan how to code and how then to earn an income because they're coding, in a global community, and they can earn that income in Bitcoin and receive it very easily. But she also will fundraise in order to help these people when they're in times of distress. And as I said, that's not particularly easy to do with something like Western Union because of sanctions on Afghanistan. But it is with Bitcoin. Very easy to do crowdfunding on Bitcoin. And people from all over the world who know nothing about Afghanistan are able to send a capital on Bitcoin rails because you can't restrict people from doing so. So just another powerful example of people on the ground who are using the technology to actually empower their lives on a daily basis. So coming up to the second trend here, and this is the one about money, right? So money is obviously this really powerful technology that we use every day, but and we are used to the current way of using money, which is a centralized way of money. And there's lots of benefits of using centralized money. It's in many senses it seems kind of easier. You just trust the bank, you trust the government, you trust the central bank, and you don't really have to think about it too much. It's like, okay, I'm in South Africa, I use rands. It seems kind of simple from that sense, and that is, there are some benefits to that approach. But when you are trusting in a centralized organization like a bank, like a central bank, like a government, well, of course, you become susceptible to that organization. And some organizations abuse that trust. Now, abuse of trust, of course, is on a spectrum. Not all governments, abuse the trust of their government, of their people. Not all governments abuse the trust of their people, but many do, and many abuse the trust in a very extreme way. Look at Zimbabwe, look at Venezuela, look at Afghanistan, look at Argentina. I mean, there's a host of examples. I mean, Argentina at the moment is suffering from very high inflation. Turkey, Nigeria, all suffering from high inflation. So when you are trusting in a centralized organization, like a bank, like a central bank, like a government, you become susceptible to them, and they can negatively impact you as a result of that trust that you are having to put in them. And this can result in all sorts of negative outcomes, like increasing debt, high inflation, and potentially discrimination, like we saw in Afghanistan. Capital controls, expropriation, these are obviously also forms of discrimination. And here's just I'm not going to dive into every last detail because we'll run out of time, but here is looking at the purchasing power of dollars and rands. If it was the purchasing power was $100 or 100 rands in 1972, what is the value of that money today? Well, in the US, it's 16% of the 1972 value because of huge amounts of inflation. In South Africa, only 1.5% of the 1972 value. So because we trust in the central bank, you kind of forced to trust in the central bank to hold the value of your currency, and they don't do that. They don't look after the value of the currency because they lower interest rates, they increase debt levels, they increase the supply of money dramatically. It results in inflation. So our money doesn't hold value. And this regime that we've been in of the current monetary regime, well, if you look back through history, these regimes do change over time. In the last 100 years, we've had 3 different monetary regimes. Pre-World War I, we had a gold standard. Post the World Wars, we had kind of a pseudo gold standard. And then after 1972, we had this dollar reserve standard. So we've had lots of different ways of using money, interacting with money, store of how to ensure that money holds its value. As I said previously, it was linked to gold. Since 1972, we haven't had a linkage to a physical commodity. But anyway, the point I'm just making is that regimes do change. The monetary regime has changed many times through history. It's likely that it'll change again. And if you look at the current level of interest rates and debt, it just highlights the potential that something could change again in the future. I'm not saying it's going to change today or tomorrow or next year, but the probability of change at some point in the future is definitely non-zero. And if you look at monetary policy today, it's changed significantly relative to 10 years ago, 20 years ago. So I would argue the change is already underway. But anyway, I'm just making the point here that we're in a current regime. It works in a certain way with centralized institutions. There are benefits to it, undoubtedly. I'm not going to deny that whatsoever. But there also are weaknesses. You get all these consequences like inflation, erosion of value, and that historically we have seen these things change. I think it's inevitable that they will change again. And we don't know exactly what that future will hold. But the question is that I will pose to you guys is what's the probability that Bitcoin and crypto have any role to play in that future monetary regime? And I've pointed out here that rands, dollars don't hold value particularly well over long periods of time. Well, by contrast, Bitcoin, yes, it might be volatile, but it's held value better than any asset basically ever in the history of finance. Here, you're looking at the price of Bitcoin rebased to 100 at the peak in June 2021. So after this peak, the price of Bitcoin collapsed for some period of time. It hardly even shows up on this graph. But relative to all these other asset classes, the S&P 500, the Barclays Ag, which is bonds, relative to commodities, relative to gold, relative to oil. I mean, Bitcoin has dramatically outperformed. Yes, it's volatile, sure, but it's held its value. This is a powerful, it's a powerful tool to be able to store value over long periods of time. And this is a similar graph. They've done the same thing, rebased all of these asset classes to 100 at not the last peak of Bitcoin, the previous one. So there was a peak on Bitcoin in October 2021. The previous one was December 2017. And once again, here you can see the weakness that took place after 2017. Basically, I want to make sure that I'm not doing any unfair comparison. I'm giving Bitcoin the negative of a head start. It is having to come from behind after a big negative experience. But despite this big negative experience in 2018 and again in 2022, so despite the fact that it's had two 80% drawdowns over this time frame, it has still outperformed these other asset classes substantially over the time frame. So if you're looking to store your value over long periods of time, well, I mean, there's just been no better asset class. And what this also shows basically is that, coming onto this volatility question, and listen, undoubtedly volatility is something to navigate, but over long periods of time, basically it doesn't matter. That's what these graphs are telling you. Volatility doesn't matter over long periods of time if you just have enough patience to wait for the asset class to gain. I mean, over any 4-year rolling period, Bitcoin has never been down. That's quite an astounding stat. And thinking about it in a portfolio context, you get quite powerful outcomes because, anybody who's studied anything to do with finance knows about portfolio theory. Portfolio theory says add a uncorrelated source of return to an asset to a portfolio, and it'll improve risk-adjusted returns, right? Well, that's exactly what something like Bitcoin provides. So small allocations have very little impact on volatility and drawdowns of a balanced portfolio. So this is looking at a global balanced portfolio of 60% MSCI World, 40% Barclays Aggregate. You get very similar outcomes if you do it with South African data, looking at 60% all share index and 40% bonds. And this is just what that basic portfolio, the annualized return since 2010, and then the maximum drawdown over that time period, and the minimum 1-year return. And then these other portfolios are just adding some Bitcoin to the basic portfolio. So adding 1% Bitcoin, 2% Bitcoin, 5% Bitcoin, 10% Bitcoin, rebalancing on a monthly basis. And what you see is that you see a profound impact on returns with very little impact on volatility and drawdowns. So that, for me, is the asset allocation panacea. I mean, that's what I used to do. Asset allocation on portfolios, you're looking for an uncorrelated source of return. Bitcoin is uncorrelated, not all the time, but most of the time it is uncorrelated. So adding small amounts to a portfolio. And often a question I get is, how much should people allocate to Bitcoin? We can get into those kind of details in the questions, but this is showing you, if somebody has got not high risk tolerance and they only have a moderate understanding of the asset class, well, then they could just look at, 1% allocation. As long as they've got a time horizon that's longer than 4 years, it starts to become a no-brainer to think about allocation from a portfolio management perspective. So yeah, the volatility here, really, people who have this, insatiable problem with volatility, they're just not thinking about the position sizing appropriately. You don't have to have 10% of your portfolio, even at 10% of portfolio, it's still not having a massive impact on volatility and drawdowns. But I mean, it clearly is having some impact on volatility and drawdowns. So you can just limit the position sizing to manage the volatility appropriately. So getting back to our use cases and our case studies, this is an example of financial security from Venezuela. So, we've spoken about kind of discrimination in Afghanistan. We've spoken about, in South Africa, it's less kind of discrimination. It's just, it's kind of discrimination. It's not overt discrimination. It's just challenges getting hold of, bank accounts, identity documents, getting hold of proof of address. And, in Venezuela, they've, suffered from hyperinflation. There are many countries that have suffered from hyperinflation in the last 10, 15 years in the world. And, the economic mismanagement of that country, of that government, has seen incredible depreciation of the currency. And as a result, this hyperinflation, it's caused a humanitarian crisis, shortages of food and medicine, immigration of people, all over the world. And, people in Venezuela, once again, Bitcoin is volatile, but at least it's volatile to the upside. And for people in Venezuela that are seeing their currency lose value on a daily basis, well, they would far rather hold Bitcoin than they would hold Venezuelan bolivars. And in fact, they would often far rather hold Bitcoin than they would hold dollars. Now, dollars clearly have the benefit relative to Bitcoin of being more stable on a day-to-day basis in price relative to goods and services, undoubtedly. But when you're living in a developing country, getting access to US dollar bank accounts is not particularly easy. So then storing physical dollars is obviously risky and potentially unsafe. Well, with Bitcoin, not only can you set up the account, as we've seen, can you receive capital, in minutes, but it's also much easier to secure. All right. For anybody who's set up the account, there's different ways of securing it, and some of them are more secure than others. And once again, we can get into those details in the questions. But the simple fact is that it's much easier to store. You can potentially store millions of dollars of Bitcoin, quite simply. You don't need to have some, big, don't have to have some sort of big safe and armored guards that are looking after that capital. And obviously, also because of that security, it's not only safe from robbers, but it's also safe from the government, right? So some governments are trying to seize people's capital. They have restrictions on people's access to things like dollars. Whereas, if somebody comes to search your property, they're not going to, it's not easy to find a Bitcoin wallet. Whereas, finding dollars, finding gold, much easier to find. All right, so those are our two trends so far: the internet, the digital age, this shift of and the power that this technology is having, and now having an impact on money and finance. The trend of money is a few different components there, but essentially, monetary regimes change. The current monetary regime has obviously had its value, but I think it's changing. And the third one is just demographics. And so anybody know who this gentleman is? Who's this guy here? There we go, Bob Dylan. So what was Bob Dylan speaking about here in this song, Times They Are Changing? Well, that might take a little bit longer to type. So I'll jump in with the answer just in case. He was talking about times they were changing. I think he wrote the song in the 1960s. Times they were changing in the 1960s, and I'm not just trying to make some sort of like philosophical argument that times are changing. Times just are changing from a demographic perspective. You just look at the data; it's quite obvious to see in demographics. So if you look back through the history of the world. Baby boomers are the generation that were born after the Second World War, between 1946 and 1964 approximately. Obviously, it depends on your definitions here. So that's my my parents' generation, and they were a very powerful generation. Because it was post-war. Lots of people, but the world also went through a big economic boom, particularly in the 70s, the 80s, the 90s, the 2000s, ever since, right? So not only were baby boomers a big generation in terms of their number, but also their wealth. So a few little stats here. This is US based data, but I mean, US is obviously the world's largest economy, biggest holders of wealth, and the global trends also do go out into the rest of the world. It's not just the US. So in the US, baby boomers, they're a big generation in terms of number, but they hold 50% of national wealth. I mean, that's absolutely incredible stat. Just one generation hold 50% of the national wealth. Right. So they've been incredibly powerful, but obviously there is some sort of inevitability of demographics here. I mean, I'm not trying to be morbid. My parents are baby boomers. I don't want my parents to go anywhere. But the truth is that at some point over the next 10, 15 years, either people will actually be passing away and that generation will be smaller, but also they will be moving into retirement and be less important from a economic perspective, from a political perspective, from a cultural perspective. And so this is just a very basic graph here, looking at these generations. Boomers here, the light blue, and obviously they're becoming less important. And millennials are similarly to boomers very large in number, right? Look at this, by 2025, 2030, millennials will be a very dominant generation. So there's a big change basically in the world taking place. That's just inevitable as a result of demographics. And this is not, I don't think there's even a prediction here. This is just the reality. And that's going to have certain impacts. I mean, clearly older people are going to be, on average, of course, it's not all older people. Some older people, my dad holds Bitcoin. There's lots of old people who hold Bitcoin, and there's lots of old people that are tech savvy. But on average, older people are less tech savvy, less interested in digital technology. Whereas younger people, of course, are going to be more tech savvy on average, and they're going to be more interested in digital technology. So this is just some data, and there's lots of different surveys you can look at, but this data is from a survey called Stilt. They say that there's a 2020 survey. 94% of crypto buyers in their survey were younger than 40. So clearly people interested in crypto bias towards being younger. Statista survey saying that 53% of crypto holders were under the age of 34. So a significant bias towards a younger generation. And this creates, once again, also some air of inevitability towards digital technology, that younger people are going to be more dominant socially, economically, and politically. Because remember, there's a regulatory impact here too. And as a result, acceptance of the newer technologies that clearly do things a little bit differently. But that's just the way of the world. All right, so touching on the last few sections here, what is crypto versus what is Bitcoin, right? So there's a lot of different crypto assets, and often that's quite confusing for people. And I also will just say at the outset is that for beginners, I always recommend that people focus on Bitcoin. Bitcoin is actually Bitcoin is purely focused on money, which while still, of course, can be somewhat complex, but it's a lot less complex than other things. If you think about just coins or notes, reasonably simple technology relative to a financial instrument or something like that. And it's Bitcoin is the one that's also not only the simplest, but it's been around for the longest period of time. It's, unless you're comparing it to something like stable coins, it is less volatile, it's more secure. And so I always recommend that people focus on understanding Bitcoin and just start by kind of ignoring a lot of the other stuff. There's a lot of nonsense out there. But basically, what has Bitcoin done? It has created this concept of digital scarcity, right? Bitcoin is the first digitally scarce asset. And crypto, basically, what it's doing is just applying that concept into other realms. So Bitcoin applies digital scarcity to money. Crypto applies digital scarcity into other realms. So, what about other financial instruments, loans, derivatives? People are using, digital scarcity in the identity realm. Can we create a technology which then, houses all your identity information, and you can just release little bits to certain people, and you don't have to be sending all these documents around? What about for ticketing? Can we just have digital tickets rather than physical tickets? That I think, and these use cases can be quite useful and quite powerful. But the complexity, one needs to be aware that as soon as you make things more complex, it can create certain consequences. So basically, I would say the key principles in crypto are decentralization, scarcity, immutability. Bitcoin focuses on being decentralized, scarce, and immutable. So once you've made a transaction, it can't be changed. And as you introduce complexity to try and solve these other kind of more complex use cases, you tend to compromise on some of these principles. So, it's difficult to do it. So let's make it a little bit more centralized, so that we've got a little bit more control, so that we can make sure things work properly. That's kind of the way the logic might work. And that, of course, can have certain implications. Now, I think that, once again, I've made it clear, and I'll say it again, there's a lot of interest and value elsewhere in crypto, but you've just got to be cognizant of compromising on these principles. Of course, if something gets too centralized, well, it's very easy for it to be a scam, for it to be a Ponzi, for it to be fraud. So, we've touched on Bitcoin, and Ethereum is the second biggest cryptocurrency. It also is quite decentralized. It's powerful that it has been able to do so. It's a platform to create a lot of decentralized use cases. But as I said, if you get too centralized, which I don't think Ethereum is too centralized at this stage, of course you run into scams, Ponzi's, and frauds. Something like a US dollar coin. These are stable coins, which is a dollar issued on crypto rails. Very useful, very powerful. But one needs to note that it's not fully decentralized. These are issued by centralized organizations. So, I do like stable coins. I think they're very powerful, but they're not fully decentralized, right? There is an organization that is looking at any crypto project, you need to be asking yourself the question: is it decentralized? Is it scarce? Is it immutable? And if it's not, what are the consequences thereof? Because just because it's called crypto does not mean that it actually abides by all the principles of crypto. And of course, as I said, FTX was a crypto exchange. To call it even crypto is a little bit of a stretch. It's a centralized organization. It's a business. And if it's a centralized organization or business, well, it's far easier for it to be a scam. And it did end up being a scam and a fraud. That was a terrible outcome. But the truth is that, crypto and crypto principles are trying to solve this exact problem. If something is truly decentralized, like Bitcoin, like Ethereum, well, then the asset itself is very unlikely to be a scam or a fraud, because it is a distributed, decentralized organization where not one individual or organization or group of people are in control. Whereas if Sam Bankman-Fried is in control of FTX and his team, well, they can commit fraud, and that is the same. That same principle applies in traditional finance too. Any organization that you interact with, if they're centralized, can be a scam, can be a fraud, can steal your capital. All right, so coming on to regulation. Regulation is a complex subject, but let's try and make it reasonably simple here. I think the first point to note here is that truly decentralized protocols like Bitcoin, like Ethereum, well, they're kind of self-regulating, right? There's no one in control of Bitcoin. There's no one regulating the Bitcoin protocol. There's no one that oversaw my transaction with Sahini. It just works, right? Why? Because the technology is created well. It's robust. So they do actually work. They are kind of self-regulating themselves. And if you think about the extreme of regulation, often people ask this question, can't governments just ban? If it's a truly decentralized technology like Bitcoin, it's kind of difficult because it's on the internet. So what are you going to do? Ban the internet? Well, authoritarians have been trying that for many years, and it doesn't work. China tried to ban Facebook. Well, people just access Facebook via VPN. So at the absolute extreme, if the South African government decided to ban Bitcoin, which I don't think they will, but even if they were to be, so silly as to do so, then people would just access Bitcoin via VPNs. And in all the countries where governments have been so stupid as to try and ban Bitcoin, this is exactly what happens in Turkey, in Nigeria, and in those countries, people are even more aware of the value of the technology. So when the government bans the Bitcoin, people go out and buy more of it because they're like, oh, we need it even more now because you guys are being idiots, essentially. So, I like to say, if you think your government's going to ban Bitcoin, then you need it more than you think. But of course, there's a middle ground here, right? I'm just, it's good to explain the extreme case scenario. It doesn't mean that because Bitcoin is reasonably self-regulating and you can't ban it, doesn't mean that governments can't do anything. Of course, they can do something. What they can do is regulate the entities that touch the technology, right? There's all sorts of on-ramps and off-ramps between the traditional financial system and crypto, mostly exchanges, but also things like custodians, asset managers, and of course, this is where the regulation comes in, and of course it's relevant, and of course it's impactful, and all that basically we're seeing is that the prevalence, the growing importance of this technology, increasing competition globally between different jurisdictions, the incentive to get tax from crypto, and of course the generational shift that we spoke about, the demographic shift, and the increasing importance of young people, and the potential that those young people also will hold positions of power in not too long. I mean, it's quite interesting at the US elections next year. I've seen the youngest it's inevitable that you do start to see constructive regulation taking place over time.
Sorry, Rob, it's Megan. We lost you
Yes.
for a second and it does keep glitching. Would it be possible for you to switch your camera off so that the feed is clearer? Please.
Sure.
Great, thank you.
There we go. So basically, I'm just making the point here that these trends of increasing prevalence, jurisdictional competition across different jurisdictions, the incentive to get tax in crypto, on crypto, and this generational shift means that oversight for me is inevitable. And a critical component to this is increasingly large organizations like BlackRock moving into the market. So recently, in recent months, we saw that BlackRock, which is the world's largest asset manager, they've applied for an ETF, to a spot Bitcoin ETF, which of course will increase access to this technology. But once again, it has this regulatory impact. There's a lot of pressure on politicians to finally make constructive regulation so that people know what's going on. Briefly touching on what's going on in South Africa. Well, of course, South Africa is legal to buy, sell, and trade. It's taxable by SARS. Unfortunately, the FSB has hampered adoption, particularly amongst asset managers and institutions, by excluding crypto from Reg 28. So that's obviously a key thing to be aware of that you probably are aware of already. The FSCA has announced now that cryptos are financial products. So service providers must be registered as FSPs. So, I mean, there's a positive and negative to this. The positive being that, there's a good way to, check the credibility of organizations. It does, of course, introduce some red tape. But I mean, once again, it's just good to be aware of the technology. And I think it's interesting to note that South Africa has really strong adoption of crypto. And this is some data that I put together. Don't worry too much about the exact numbers, and also, yeah, because it's we don't have to go to the detail of exactly what it's showing below the surface. It's just basically a measure of penetration, trading volumes relative to gross domestic product. And what you see is that South Africa scores pretty highly here, so we have pretty high penetration, and it tends to be adoption is strong in countries where government trust of government is not as strong as it could be. Places like Nigeria, Colombia, Russia, Argentina, Ukraine, because in those countries people understand the value of the technology even more, because there is some distrust of centralized institutions like the government. All right, and then closing up here, just the cyclical outlook, and keeping it quite short, but essentially, Bitcoin tends to have a bear market every 4 years. This is what I've shown here on the right-hand side. This is just the price of Bitcoin on a log axis. It's going exponential, but so it's on a log axis so that we can see what's going on there. These are these bear markets that take place every 4 years. Another thing that also takes place every 4 years is the halving. The halving is when Bitcoin supply growth gets cut in half. That's over here. These are the halvings, 1, 2, 3. We've got another halving coming up in May 2024, which will reduce the supply, which obviously is a positive thing. Imagine if the South African Treasury was reducing the supply of government issuance next year, right? That would be quite positive for bonds. Of course, it's not doing that. Bitcoin programmatically reduces the supply growth every 4 years. And that often is the trigger for a more exuberant phase of the Bitcoin cycle, right? So we went into, this is looking at the annual returns on Bitcoin, right? Some years I've just cut off the graph because it's too high. These are the bear markets, 1, 2, 3, these negative return years. These are the halving years, purple, 1, 2, 3. Next one coming up, is next year. And you see the cyclicality of the asset. Down year every 4 year, halving, every 4 year. Apart from that bear market, they tend to be very strong returns. And basically what I'm saying in very simplistic terms is that been through a bear market last year. It's over now. There was a lot of liquidations. There was a lot of nonsense that was thrown out of the market. Things like FTX, uncovered lots of challenges. This year has obviously been positive for price, but it's probably going to be somewhat muted relative to some of the other years because people still have a hangover from last year in 2022. But as you approach this halving of cutting supply in half, it tends to be quite positive for price. And I wouldn't be surprised if it's a positive year in 2024 and 2025. So basically the conclusion here is expect client questions. And that brings me kind of to my conclusion, the digital trend, the monetary trend, the demographic trend, and adoption, both from investors but from regulation, I think is inevitable. I wouldn't be surprised if we see higher prices in the next year to 2 years. And I know that Ryan and the team, they want to get ahead of these trends because basically you don't want to be playing catch up when that exuberance takes place and then clients are just asking you questions at the time. You might be constrained from regulation on what you can do, but it's about educating yourself and educating your clients so that people act prudently rather than just emotively when strong prices do inevitably emerge at some point down the road. So, and it's difficult to talk sense into people when that exuberance does take place. So yeah, thank you for the time. It's great to be here. What I will do is I will add people, everyone on the call onto our markets and education mailing list. If you'd like not to be on it, obviously just respond and say that you don't want to be on there. But I take it that you're on the call because you want to get educated. So I'll add you onto the education list. And if you have any questions, obviously ask now, but also you're welcome to kind of send us an email and respond to any of the information that you do see there. All right, Megan, did you come? I got any particular questions that you wanted me to go? I see one here from Sali. I don't know if that was.
Yes, sorry, I was busy chatting to myself because I was still on mute. So Rob, there is questions from Sali, and I was actually going to request that he unmutes and ask his questions to you directly. Sali, if you can please unmute.
So yeah, so jumping straight into your questions here. Let me start with I'll leave number 4 to the side. Listen, price predictions, one can do it, but it doesn't really add a huge amount of value. I really think that if you thinking about it from that sense, and you're thinking about allocation, you want to be thinking about this. This is what you really be thinking about. It's not about where the price could go. Do you think that the technology is valuable? Do you understand these trends? If you're thinking about allocation, then it's more about position sizing. Do I want, am I low risk and don't understand that much, so I just want a little bit, 1%, or do I understand quite a bit and I'm high risk and I want higher allocation? And stop thinking about trying to predict the price, because it actually, obviously, listen, professionally, I still don't predict the price. I analyze the markets and have views over the coming months and years. Predicting the price you can waste a lot of time doing that, and you can get yourself in a little bit of a tiz. I know you're asking the question half jokingly, but I still think it's a good insight to share. So I know you weren't being entirely serious about weighing 100,000. I'm going to leave the Bitcoin Maxi question to the side. In terms of determining whether Bitcoin is overvalued or undervalued, well, listen, I mean, it is a difficult asset to value because it doesn't have a yield and it doesn't have an income stream. This is one of the reasons why traditional financial managers struggle with an asset like Bitcoin. It's the same reason why they struggle with an asset like gold, because gold also doesn't have a yield and it also doesn't have an income. And therefore valuing it is tricky, but it doesn't mean that you can't value it. I've obviously explained some of the reasons why Bitcoin is valuable, because it's scarce, because it's decentralized, because it isn't controlled by the state. But those don't quantitatively give you a number of, okay, Bitcoin should be worth 50,000, 100,000. So, there's no simple answer to your question, but hopefully this adds some value to your life. And some of these metrics that I've shown you are kind of how we think about valuation, how are we cyclically positioned, who's holding the asset, is it long-term holders, is it short-term holders, is there too much leverage in the market? These type of things we'll use to value Bitcoin in our investment program. Bitcoin, as mentioned, these are dollars on crypto rails. So the most prevalent stablecoins are dollars. You could have there does exist a rand stablecoin too. So that will also be useful for people, but the most widely prevalent ones are dollars for sure, and they are very useful for a lot of people. In fact, people around the world are using dollars, stable coins. And from a regulation perspective, well, there's a lot that could happen here. I think that it's very possible that the US government actually quite likes dollar stable coins because it enhances the usefulness of dollars and it makes more people using dollars around the world. Well, that's actually quite good for the US government. And they can get all sorts of information that they want. I'm not necessarily, saying that's a good thing, but one of the reasons why governments want central bank digital currencies is to get more information and more, more monitoring of people. So I think it's possible that they actually get quite positive on central bank. Not on central bank digital currencies, on stable coins.
Thanks, Rob. The next question's from Rita Cool. She says, how do we marry ESG and Bitcoin if Bitcoin uses more power than some countries and emits millions of tons of CO2?
I'm so glad you asked this question. Thank you. So no, in all seriousness, because I think that this ESG question is badly misunderstood. So it's it might take me a little while, but it's not my 1 minute answer, but I'll try and keep it short. So, Bitcoin consumes energy, yes. So miners consume energy in order to secure the Bitcoin blockchain, right? But there's a lot of detail below the surface here. So first and foremost, there's a lot of uses of energy in the world. We use electricity on all sorts of things. We use electricity on Christmas lights, which purely gives us pleasure and enjoyment on Christmas. And we don't ever think to ourselves, that's a waste of energy. We should really turn off our Christmas lights to save electricity. No, we like Christmas lights, and people use energy in lots of different ways, and we don't judge. The only reason why we judge with Bitcoin is because some people don't like Bitcoin, and because it is on a network, you can see. Yeah, in fact, you can't see how much electricity is being used. Those are all estimates. What you can see is the computer processing hash power that's allocated to the network, and then people infer what the electricity used. Now, I'm not denying that lots of electricity is used. I'm just highlighting that they're still estimates, and they are actually wrong, because not only now, I've put aside the point about judgment, is that we don't judge many other uses of Bitcoin. Sorry, we don't judge many other uses of electricity. And for people in Venezuela, people in Mossel Bay, people in Afghanistan, I'm pretty sure they would argue that the electricity usage of Bitcoin is well worth it, because they do not have access to financial services without Bitcoin. So I'm sure they think it's very worth it. Coming back to the electricity usage, though, is that even though Bitcoin, yes, it does use a lot of electricity, it has this strange attribute where Bitcoin miners don't mind where they are located. So Bitcoin miners can go anywhere. That means that Bitcoin miners search out the cheapest electricity available in the world. So a lot of the energy that is used in Bitcoin mining would have been wasted anyways. So while the energy industry, energy is obviously scarce, and even in a place like South Africa, we still will be wasting a lot of electricity, because electricity is not easy to store and it's not easy to transport. So even though in South Africa electricity is particularly scarce, it still doesn't imply that some of it's not wasted. Lots of it is wasted, because you just can't get it to the end user at the right time. People want power at all sorts of different times of day and in different places in the country. And Bitcoin is this incredible tool where, as I said, it doesn't mind where it is or when it's used. It can go straight to the source. So there are examples of people harnessing power where they wouldn't previously have been able to even harness that power, because they can use Bitcoin miners. So the short answer here is that I think that the question is deeply misunderstood. There are obviously a lot of detractors to Bitcoin, and the energy one is an easy one for them to try and beat it down, because you can create these estimates and say, oh, it uses a lot of electricity, but it's a badly misunderstood topic. Below the surface, Bitcoin clearly has got empowering aspects for people, but over and above that, it's not always competing for the electricity that you want. It's often going to find electricity that nobody else wants, because that's the cheapest, and it makes it more profitable for those people. So hopefully that gives you a reasonably short explanation. I've got a long video actually, so flag it down for me. I'll send through the link to that video, which explains this in more detail.
Thanks, Rob. I'll look out for that link. Okay. Sally commented he was just messing around with number 4. Nicola has a question on the Moon app, but I'm going to leave that till after Bruno's question. He says, with drawdowns experienced of 80% plus, surely price can't be ignored.
I'm not sure what you mean by that, Bruno. Listen, I think in both directions, the price can't be ignored. I mean, clearly there's something quite powerful taking place here.
I've allowed your mic, Bruno, so you can unmute and chat.
Hi, Rob. No, it's just a springboard off Sali's question around valuation.
Yeah.
I mean, an asset that has the ability to draw down 80%, if someone has a lot of conviction in it and deploys 50% of their capital into it because they're very convinced about the long term, but happen to be jumping in at a very, let's say, long in the tooth point in the cycle, they could prejudice their future returns quite severely, and they may not be able to hang in there in order to recover. I mean, these recovery cycles will take quite a long time. So that's why it's basically just a springboard question off of Sali's question.
Yeah. Yeah, and listen, there's lots of different ways to look at it. In one sense, obviously when the price is down a lot, that presents some degree of value because it's significantly cheaper than it was. But you're also mentioning, time horizon matters a lot. Once again, that's why it comes to kind of position sizing. You clearly don't want to be investing in this asset class with, capital that you need, over the next month, even the next year, because it's volatile, right? So, position sizing appropriately is critical.
Chirag has a question as well. She said, what was the toughest conversation you had with a wealthy client about crypto performance?
Yeah, I'm not quite sure. I'll have to give it some thought and get back to you on that one.
Okay, perfect. And then Gary's made a comment. Not sure the term
Yeah, so
investment
I can see
is.
Gary's
You reading
comment
it?
here.
Okay, great.
So, yeah, listen, there's different ways of utilizing the technology, Gary. Of course, for some people, they are just using it on a day-to-day basis. Right? But if you are thinking about, the future of this technology and what it could be in the future, then you can think about it from an investment perspective. So, what if the monetary regime does change over the next 10, 20, maybe it takes 50 years. Maybe it takes 50 years for the monetary regime to change. But what is the probability that Bitcoin has any role to play in that? If that probability is higher than zero, then it becomes a no-brainer to think about some sort of allocation to the asset class. And then you are thinking about it from an investment perspective. And you can also think about it from a risk management perspective, because if the world does change or if Bitcoin has some role to play in the future of money, then the price could be substantially higher than where it is today. And if you don't have an allocation, then you've got a big risk within your kind of your assets, within your wealth, that everything else will lose significant value relative to Bitcoin. So from that sense, you can kind of think about it as a risk management investment against the probability that it does have a role to play in the future. So there's a lot of different frameworks to think about the asset. Yeah, and one needs to be aware of the different ones and obviously figure out which one is most appropriate for your from your lens. Yeah, in terms of the expectations for volatility going forward, listen, I do think at some point volatility on something like Bitcoin will be reduced. Yes, as more people do hold it, it's more likely to it's the evaluation of it is likely to become more stable. Because also, to reiterate, that one of the reasons why Bitcoin is so volatile is because there's such a wide spectrum of opinions of what its value is. Some people think that it is, worth hundreds of millions of dollars, and other people think it's worth zero. And when you have this very wide spectrum of expectations, you oscillate from the one side to the other, and then you see huge discrepancies in price. Whereas if you look at a house in Sandton, yes, there might be a range of people's expectations of what the price of that house is, but they're not going to be from zero to 100 million rand. But to your point about how volatility changes in the future, I do think that I think volatility will fall in the future, but it might still take quite some time. I mean, adoption of Bitcoin is still quite low, and as those flows find their way into the asset class, I wouldn't be surprised if there's volatility in both directions. So I'm wary to conclude that the volatility is going to subside over the short term, but I expect it will subside over the long term.
Thanks. I am acutely aware of the fact that we have gone a little bit over time, but there is a question from Nicola. She says, can you transfer Bitcoin into your own Moon app, like a bank account, or can you only receive from other Moon apps?
So you can receive, so on something like Moon, you can receive from any Bitcoin wallet. So these, if I come on here and go receive, this is a QR code it's a Bitcoin QR code. So you could send money to this receive address from any Bitcoin wallet. And obviously vice versa. So if I want to send and the other person is not on Moon, I can send as long as it's as long as it's a Bitcoin wallet. So I mean that's the nice thing about Bitcoin, about proper Bitcoin wallets, is that they aren't closed systems. So somebody can be using some app created in China that there's nothing to do with your app whatsoever. But so in terms of buying Bitcoin, my understanding is this is just a wallet, right? So this is not this won't have the ability to buy. I'm pretty sure it doesn't. This is a transacting wallet. To buy Bitcoin, you most likely you have basically two choices or three choices. You could do some work and somebody could pay you in Bitcoin. You could exchange with somebody or you can go onto an actual exchange, something like Luno or Valar, where there are obviously lots of different people looking to exchange, and you can buy and sell Bitcoin or any other crypto asset, and then from there you can transfer it to your wallet. And just a quick word of information here while we're on it. Obviously, the place that you store your Bitcoin matters. So if you store all your money on a centralized exchange, you are susceptible to their security. Right? They might have good security, they might have bad security, but even good security, of course, can always be broken. So there's any number of possibilities. A centralized exchange could be an absolute fraud, like FTX. Of course, not all centralized exchanges are frauds. Of course, they're not. But even if they're not, that still doesn't mean they aren't susceptible to risks. Because, of course, if you have all the money in one place, then it becomes very attractive for people to attack that place and try and steal it. So if you're buying large amounts of Bitcoin, basically you don't want to store it on a centralized exchange. You want to start learning about how to download it onto a self-custody wallet where you are in control of the assets. That, of course, does introduce a different risk. Now the responsibility is on your shoulders, so you better make sure you secure your password appropriately. If you have more questions about this, kind of let me know. But essentially, if you're a beginner, it's fine, I think, to use an exchange. You're probably not going to hold a huge amount of capital there. As you start to hold more and more assets and you kind of, I've got quite a lot of money there. Now you don't want to be susceptible to the security of the exchange. You want to start learning about self-custody, but you want to understand what the risks are of self-custody. It's not it's not a riskless process. You are putting the risk on your own shoulders. And that is a wonderful thing. It's very empowering. But of course, if you lose your password, well, no one's going to come and help you, because remember, it's a decentralized, it's a decentralized network. No one is there that's remembering your password on your behalf. So yeah, anyway, that's a quick rundown on kind of basic Bitcoin security.
Thank you so
Fantastic.
much,
Well,
Rob.
I need
Yes.
to run. I really appreciate all of the questions. As I said, I will put people. I mean, there's a lot of people on here, so I'll get the mailing list from Megan and add you onto kind of the education and markets mailing list. You know, if you don't want to be on the list, obviously just respond and we'll take you off straight away. And please, you know, continue to send through the questions. Yeah, anything else to add from your side, Megan?
Nothing from my side, just a very interesting presentation, lots of information, lots to think about. Thank you very much for making the time. Can we just pop your email address into the chat box so that if there are any further questions, they can be directed straight to you? That would be great. And thanks very much, everybody, for joining us. And we hope to see more of you, Rob.
Fantastic. Thank you, Megan. Thank you,
All right,
Ryan.
then.
And thanks to everybody for all the questions.
Perfect. Thank you so much, everybody. Have a good afternoon. Bye.